Foschini Group has a price-earnings ratio of 17, a dividend yield of 3.4% and a market cap of 33 billion rand. Foschini consists of 14 trading brands selling lifestyle products that range from fashion, jewelry, accessories, cosmetics, cell phones, homeware and more. American, Swiss and Stones are the largest and second largest jewelry chains in Southern Africa respectively, having traded successfully for more than 100 years. They know the diamond story well then through their jewelry exposure.
Yeah, and Foschini is a stock we talk about often here on the show. It seems to come up in conversations, obviously, about retail and clothing and so on as well. So this is a smaller division, but as you say, they acquired, I think, American Swiss and built and launched Stearns or something like that, or maybe the other way around. But it's been a retail group that's had its ups and downs. Currently, though, it's doing spectacularly well. They perceive to be, positioned well. They're very good at credit. They offer people cards that are backed by their retail credit solutions business, so you can get basically a card in almost all of their businesses, and it's kind of centrally risk managed, and they're quite good at working out who's good for the money and so on and so forth. I don't know that South Africans are as bling obsessed as the Chinese we were talking about earlier, but clearly there is a market for engagement rings and all that kind of thing, and they're
clearly it's a normal part of life, and yes, there is a market, I'm sure, for engagement rings. I wouldn't question that, would you, Anthony?
Yes, if you mention Foschini and luxury in the same sentence, it's a play on mass market luxury demand through their American Swiss, American Swiss.
Let's try that again. I would also like to say American Swiss.
American Swiss and Stearns stores. But like-for-like sales have been lackluster since 2009, and you can peg that squarely on the rampant gold price inflation. A lot of the stock has been they've been forced to price it above where people are happy to pay for.
Does this look like a traditional retail stock to you from a graph or share price perspective? We're at about 100, above 120 rand now on Foschini.
It does. They all look like that. And I think what's happened is that global investors have woken up to the fact that if you want to go of emerging markets and you want to go for companies that are well run in terms of their internal corporate governance, good accounts, and a good combination of tactical buying, local sourcing, as well as selling into imported Chinese goods, plus the whole African continent, because all of these companies are making steps, some of them a little bit further along than others, to expand into the malls in the hinterland and also outside South Africa. So they've just loved them. And you've got to ask yourself, well, why would they stop loving them? So all of them have seen increases in global holdings of their shareholder base. All of them are trading now at price-to-earnings ratios of between 20 and 30, so none of them are cheap. But at the same time, I think, all else being equal, they're going to continue to do well.
You think they're going to continue to do well. Anthony, of course, there is the risk element out there that we could see the positive story reversing on this. If risk aversion is heightened in the general system, then perhaps we could see foreigners selling out as strongly as they have come in, and that could rebase and downwards all our retailers. Is that a bit dramatic?
No, I don't think so. I think the foreigners have been marginal buyers, and they are growth tourists. So once they see the growth slow down, they'll hit the sell button and ask questions later. Foschini is a risk candidate in that, as Paul said, 60% of sales are on credit. So you've also got to question how much more credit appetite is there out there.
The South African consumer has.
Yep.
But when we talk luxury, remember my other favorite theme when it comes to luxury buying is that sports thing, where people are buying branded jerseys for their favorite sports club from Total Sports and Sports Scene, which is a part of Foschini as well. So,
So they've got that double whammy on the theme that you like,
Yeah, because, buying a Kaiser Chiefs shirt is definitely a luxury purchase. You're going to feel good about yourself all weekend. So there's more of that to be done, and the margins on that are good. So I think all things being equal, they can continue to deliver here. So I'm not too anxious, because many years ago it was just one show in town, and that was our local interest rates. Now everybody's a little bit more positively inclined.
Just one word of advice: if you're wanting to make your wife feel happy, don't buy her a branded T-shirt, rather buy her a diamond.
Okay.
Hot or not, Anthony, on Foschini?
I'm hot on Foschini, but not for its luxury offering. It's only 10% of sales. And if you walk into any of those stores, you'll see the big 25% off placards. Good if you're an apparel retailer, but not if you're a jeweler. So hot on the apparel.